The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, I'm going to start the show today with a old chart from the days of Jesse Livermore back in the early 1910 to 1930 area, where they posted all their charts by hand. And this is one of his hand-posted charts. It comes out of some material from Richard Smitten. Richard Smitten was a family friend of the Livermore family, and he wrote several books about Jesse Livermore. Livermore took his own life in the Roosevelt Hotel in New York City. There was a lot of talk about him being bankrupt. His one account that he had was bankrupt, but he left a considerable number of trust funds that are still operating to this day. So he had huge amounts of money that he had put away in trust, and the reason for his taking his own life had nothing to do with the financial markets. It was because of a love interest that he had with a 19-year-old showgirl on Broadway, and of course he was, I think he was 60, and that usually doesn't work out very well. But anyway, the chart is really interesting because Basil does a great job of talking about his different waves, and I don't know if they relate to this or not, but I happen to be going through some old material, and I saw this, and I said, gee, this looks very similar to the type of counting that Basil does, and I really don't know if it's right or not. I probably should have checked with Basil first, but it does have some interesting counts. What's interesting is you'll see that that the things that Livermore was looking at, back in the early 1900s, was nothing more than these little ABCD or Thunderbolt patterns that we look at all the time. That's pretty much exactly what he was doing when he was watching these things, and he was watching for old support and resistance. And what you're looking at there is an expanding, triangle, and of course, when it breaks out of that, to the upside, it certainly, certainly can move a long way. I'm going to talk a little bit this morning about briefly, just about the crop report that we just had in grains just a few minutes ago. It was due to be very, very bearish. It was not very, very bearish. It was a lot less bearish. In fact, just a tad friendly, and the markets in the grains have actually rallied just a little bit. So we'll cover more of that tomorrow on the show, and we'll also have Rich Anderson on to go over what the crop report is doing, because we're getting close into May now, and that's what we're looking at, because last May is when we had the big move that started in the grain markets, and we've had this huge sell-off, which sets up a really great opportunity for us. So we want to look at that. The next chart that I wanted to post into the Tiger TV is a expansion of the type of work that Livermore did, and the same thing. I don't do anything different than any of these people. Really, it's just everything that the market does is A, B, C, D, and all it's showing here on this S&P going back over the last 5 or 6 days, that all of the corrections have been equal. They've only been about 10 points. There's been 3 of them, and that's basically 8 to 10 points. That's what they've been, each one of them, 3 of them, and now we're having this big move to the upside that has carried the market into new high ground, and they're pounding the accolades on Wall Street right now about what's happening in the market and the fact that it looks so wonderful here, and it might be, I don't know, but let's just go back for a moment, and we do a lot of work with the lunar cycles and stuff, and we're in a new moon today, and the theory is if you buy on a new moon and sell on a new moon, you will do extremely well in the market. However, there's one caveat here, and that is when the market is strong, very strong into a new moon, that is not the time to buy. That has a better than 85% probability of turning, and we're talking about going over 1,000 samples over 100 years. So every time the market has been going, strong into a new moon, that has not been a buy signal. And the same thing is that if it's coming really strong down into a new moon, it has not been a sell signal. It's been a buy signal. It's been the reverse. Now, the price that I was looking at today for the Dow Jones Industrials was at 14,830. We got to 14,810. We'll see if we can still make that 14,830. We've already exceeded the price that I was looking at in the S&P. I thought we would get to around 1578, and we've gone a little bit higher than that. Today's close will be very important because we still have 4 hours to go, and if we do close badly today, that would give some indication that maybe this 14-day cycle that is the new moon cycle might be, holding the market back, for just a little bit. But the bullish consensus here, across the board is, there's a lot of people that are very, very bullish here, and it's and then the Dow is in new high ground. It's higher than it was in 2007. So we have to certainly, respect that because it's been a been a one heck of a move, and we've had these three drives patterns, and they just keep extending up into higher levels, and one of these times it's probably going to turn. But like you say, the market has a tendency to outlast your money supply if you don't use a stop, and that's the main thing that you have to do is you have to protect yourself with these. But it looks bullish here, folks, but frankly, I have some real strong reservations about it. I listened to Basil's show because he has a lot of experience, and experience means a great deal to me. And he brought out the fact of what the VIX is doing, and actually the VIX is not getting hurt badly at all today. And it's really quite interesting that how it could be where it is, given the fact that the Dow Jones is up 120 points. That tells us that maybe there is a little bit of fear somewhere in the market. If not that, just a little bit of caution. That's what we'll have to we'll understand that later if the market continues to rise. I've had the question asked to me if this is the same type of market like we had in '99 and 2000, where it just went ballistic for several months. No, that is not the same type of market, because in '99 and 2000 there was huge amounts of volatility in the market, and it was a case where it was a once in a lifetime thing in '99 and 2000, because stocks were moving 20 and 30% a day, sometimes even more. Of course, when they started down, they did it the same way. Remember that the markets go down faster than they go up because fear is a greater emotion than greed, and that causes people to act a whole lot differently than they usually do. Now, the one that I watch the most, of course, is the New York Stock Exchange Index, and it is also making a new high. It has now gone above the actually it's just a tad above the 786 on the weekly basis. That's the long-term one that I look at. We are still in that zone where, and this is an update, we're about 80 points above the 786 of that level, and completing all of these patterns. So I know it looks great and everything looks like it wants to go up forever, but I'm just very cautious here. It's paid dividends to me through the years to be cautious. I've never made any money buying into strength like this, and when the statistics are such that you have a new moon, and 85% of the time, if the market's strong, and I mean up more than 1%, if the market's up more than 1% or down more than 1% into a new moon, that is a very high probability of a low being made, or high. And today we're making a new moon on the 10th, and this is a high that we're making, no question about it, with the Dow up 130 points. So this would be a place where you'd be looking to to sell. Whether that occurs or not, I'm not absolutely sure. The dollar is actually holding up incredibly well amongst all this, so that's a very good sign, and I think that's a pretty good indication that we're holding up okay. On the commodity front, we had a report today in crude oil, and over the last 7 or 8 days, this has been doing the same thing. If you'll take a look at this chart that I'm going to put in, it's just a 15-minute chart on crude going over the last week, and you'll see that it has higher bottoms all along the way. We had a really nice Gartley buy pattern down there this morning at the 93.50 level and had a pretty nice move off of that. And then the oil inventories came out, and they were relatively positive, but the market has not responded, a great deal. I mean, it's moved up, 70 or 80 cents, but that's really not very much. We're going to have a break here relatively soon, and I don't want to go into the gold market until we get to the break, because there's a fundamental thing that, well, it's not fundamental, it's something that's in the news that I'd like to bring to everyone's attention, but we'll talk about that later. Getting back to the stocks, the Nasdaq market has also taken out that high that we were looking at just recently, and that does not negate the longer term chart that we're looking at on the weekly basis, because we are still in that head and shoulders pattern on the weekly basis for the Nasdaq. There's no oh dear, something's happened. Give me 1 second, folks. Well, I lost my data for the Nasdaq. This is one of the challenges that you get when you have a situation where you're trying to do two things at once. Let me try to pull it up one other way, and then I'm going to give myself 15 seconds to do this. And if I can't get it done correctly, I am just going to do it after the break, and then we will do it. Right now it's not working, so I'll post the Nasdaq chart after we take the break. But the VIX is actually holding up relatively well today. The bonds are down about 0.75 of a point. That's coming off that high we made at the 148 level, and that's the one that makes me feel the worst, is because I was waiting to sell those bonds at the 148 to 150 level, and we got there very fast on that 2-point up move last Thursday, and I waited a little bit too long, and I missed that move of 2 points to the downside, and that's part of trading. And all bonds are doing now is making a correction. I don't think this is a key reversal yet, and I do believe that we have one more chance to sell the bonds, but I do believe that they will get above 148. There's a question, and I'll answer very quickly, and that's about Apple. We've got Apple up $7 today. We've taken out the highs of the last couple of days. It's being run up with the rest of the markets. I still believe very strongly that we're still going to make that $3.94 a share in the Apple. We've got another 7 or 8 days to get that level. The timing band went all the way out to April 18th, as I mentioned on Monday's show for Apple. So there's nothing different there to actually to work on. Okay, we're going to take a little break. When we get back, I'm going to post the Nasdaq chart on the long-term basis so you can see what's happening.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, I posted the long-term weekly chart of the NASDAQ showing the head and shoulders pattern, and that's still in effect, even though the NASDAQ has taken out the 2,800 high. That really doesn't mean very much at all, in my opinion. You know, but remember, it's my opinion, and we all know how to analyze opinions. Everybody usually has one. Okay, the next thing I wanted to talk about is the gold market. Someone forwarded to me the fact that, you know, there's huge amounts of gold that is leaving the COMEX depositories. It's the largest drawdown in gold from the CME warehouse for gold in history. And the question that I have, if that's the case, why is gold not going higher? If the supplies of gold are being taken off the market, gold should be actually soaring a great deal, followed by silver. Neither one of these are moving very well. You know, we had a nice, $50 rally, well, actually about $45 rally in gold that only lasted for, 4 or 5 days, and now we're in the midst of a correction. I'm going to post a chart in here because we are, that gold is one of my favorite things to trade. I trade it almost every day, but if you'll take a notice of the trend line that I drew around that 1574 level, that was the 786 coming off the previous lows that we talked about on the shows on Monday when the market had the big run-up. Once we broke that low at the 1575 level, that told us that the next leg down would usually come down to the 1.27 swing, which will also be the 61% retracement. That'll come in at 15.59. That's about $10 from where we are right now. But if we go much below 15.40, the gold has just had a 5-day rally in a very bear market. That's basically the bottom line. I said in the newsletter this week, this is the one where the jury is still out. The major test is going to come here, I believe, at the 15.59 level, and that's going to be the important one to look at. Silver is actually holding up okay during this little bit of a rally. It hasn't sold off as much as the gold, but we're still a long way from gold turning the corner, on a bullish move. It really shouldn't have gone below the 15.75 level if it was really bullish, and but we'll see if that's the case. Now I'm just looking, at the patterns. That's all I'm looking at. The fundamentals, the people that send me these things on the warehouse stocks and stuff like that, I don't look at that because that's got to be reflected in the price of gold. If the declining supplies of gold are out there, then the price of gold is going to go higher. And a perfect example of that is copper. I mean, we've talked about this for weeks and weeks and weeks, how badly, copper's acting. Copper's down almost 3 cents today, and the Dow Jones up 130 points. The correlation on those markets is usually close to 90%, and it hasn't had any correlation since January. So there's a lot of things happening out here that you should be concerned about. Whether you will be or not, I don't know. When we come back at the break, I'm going to share some charts that I picked up from one of the websites that I look at, because they really do some really good historical work, and I wanted to share some of the historical things that have happened in the past with some of these rallies, and it'll also show how the market repeats itself over and over again, because the old Chinese proverb, the greatest prophet of the future is the past, because there's nothing new under the sun. That's also in the Bible. So, if you just look at what happens in the past, you'll see what usually will occur. One of the examples was, of course, that S&P chart, that I put up in that point. And someone just asked me a question: was I long during that time? And no, I was not. I was not short the whole way, but I was short a little bit today, and I got knocked out of that. But I didn't buy the dips because of my overall bearish sentiment on the market, and I was waiting for this new moon to occur today to see what happens, and then I will look at the market again tomorrow. But the price that I'm watching for the Dow Jones is 14,830, and we're about 25 points away from that. So I'm watching that, which is equivalent to 1583, I believe, in the S&P 500 futures. So, we'll see how that is going to be affected as we go through the rest of the show. The charts that I'm going to post after we come on the break they're very interesting. I hope you'll look at them, because I think they're pretty interesting. We're going to take a little break here, and then we're going to do a little history lesson about what's happened in the past on some of these things.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, I posted the chart of Italian bond yields into the Tiger Den just to show you the ABCD patterns that are there. Basically, that chart is telling you that it's had a huge drop in yields in the Italian bond market. In other words, fear has left the market, and people are willing to buy the bonds at with a horrible return. But that should be changing very, very quickly. The next chart I'm going to post is the chart of what's happened in Japan recently, where the Bank of Japan has, you can see the red line there, and that's the BOJ, the Bank of Japan, how they have used their QE3 or QE2, whichever they wanted to call it, and you can see how aggressive they've been, compared to what's happened in the rest of the market. So that's the main thing that you want to realize, that they've really done something really serious here. That's why the yen has had this huge rally. We were bullish the yen when it was down around 75, and we got to just under par. So we'll see, what happens to it. Now I'm going to just to show you how volatile this Japanese market can be, and that is that I'm going to post a a chart that came from the Zero Hedge a website that does some pretty good historical work, and it shows the relationship between 2004 and 2006 to where we are now. And if you'll look at that, you'll see that there's been tremendous volatility in this market, and that's the that's the thing that you want to realize, that just because they're doing something, that doesn't mean that they can't. The market's not always going to accept what they're actually doing, and I think that's something that is very, very important. Now, someone asked me a question about Apple again, and all I wanted to do is I don't want to spend a lot of time because I still think we're heading towards the 394. But there was also a really nice chart that showed the relationship between Apple and Microsoft, and all this chart is going to show you is the fact that all these markets act alike. I mean, that's basically what this chart between Apple and Microsoft is. It's just nothing more than showing you that all these charts do the same thing, up and down, and they usually do it in the same format. The fact that we still believe that we're looking at 400 or 390 in the Apple, and that's really what we're looking at. So that's what we're shooting for in the Apple, and I just wanted to just show you the relationship that it had with Microsoft, and all that's telling you is the fact that it's it's basically doing the same thing that it does all the time. Now, we have another situation that's going on right now, and I think it's important to bring up, and I will show you this. We've talked about it before. This is the Dow Jones Industrials, and, of course, we're making new highs today, as you can see, and, we have a big divergence in the transportations, and if you'll look at what happened during 2012, we had the same type of, divergence when the market dropped, 25%, after that particular move. So that's another chart that should be, I think, rather troubling, to what's happening, in the market, and that's just the way that what we look at it. But the next one that I wanted to bring out, and that this to me is where the real problem lies, and that's in our credit markets. That it's related to our bonds. And this chart is going to show you the difference between the S&P and the high-yield credits, in other words, the junk bonds. And as you can see, where we are in 2013 and where we were in 2012, there was a very high correlation that has been going on here, and people are really clamoring for yield. They don't really care about risk. They're interested if they're for a perfect example, we mentioned this before, American Airlines is in bankruptcy, and yet they were able to bring out bonds. I think they were rated D. I know they were low grade, but they were yielding 4.7%, I believe, and people grabbed them up right away. And, of course, I don't believe American Airlines is going to go out of business because, like the banks, they're probably too big to fail now, and, that those bonds will probably be worth something. That doesn't mean they're not going to fluctuate a lot, because if you look at the swings on high yield bonds, they're not for the faint of heart. These are not widows and orphans type trades. These are things are very, very volatile and make it extremely difficult for people to get in them and stay in them over a very very long period of time. Now, the last chart that I wanted to post is one that came from Bloomberg, and it talks about the velocity of money, and this is the money that that goes through our economy. And as you can see, since 2000, from the year roughly around 1999 to 2000, the velocity of money has been dropping quite a bit. Now, this is usually associated with deflationary type pressures. And, we have a lot of commodities that are under a great deal of pressure, especially all of our industrial commodities. And, this is not a sign that what the question that I'm asking you, I mean, not all the money that these 85 billion or trillion, whatever they bring in every month to the bonds, not all that money goes into the stock market. It's got to go someplace else. So, the question is, where is it going? It's certainly not going into commodities, and it's certainly not going into, Apple or anything like that. So maybe when it gets to 394, they'll start going into it, but we'll have to wait and see. It's just saying that there's things out there that you've got to be aware of that are just not right. I know when you watch CNBC and Bloomberg, and they're all tooting the horns and stuff, and they've got flashing things on CNBC now saying S&P in the new high ground, S&P in the new high ground. They were doing the same thing in October of 2007, folks. Believe me, I was there because that's when I first started, doing a few minute segment with Tom O'Brien. I remember I was in Las Vegas at the time when that was happening, and they were just so this is the big leg up, and 3 days later, the market rolled over, and that also was happening right at the new moon, as I recall, and so just be real careful up in here. It looks like everything is right on target, but we'll have to wait and see. We're very, very close to that target that I'm looking at in the Dow Jones Industrials. We just hit the S&P target that I was looking at 1583, and the target in the Dow that I'm looking at was 14,830. So we'll see if this is going to be a key day. I know it's it's a key lunar day. The question is will it work? I mean, it has a high probability of working, but as we all know, that these are probabilities. They are not. They are certainly not. What do we call it? Perfections. As we're speaking here, we were talking about gold getting down to the 1559 level. We are within about $2 of that right now, and we'll probably, as we only got about 20 minutes left on the show, we're going to see if this level holds. Someone asked me a question: am I buying here at the 1559 level? And my answer to that is I'm not sure yet, because we have a really strong trending move of $10 in the last half an hour. That's a lot of selling coming in here, so I want to wait. We're at 1559 now, so we're very, very close. So what I would be doing is I would wait until it held this level for at least 15 minutes. This is the falling knife syndrome. You don't want to have to stand there and try to catch a falling knife. Wait till the knife, lands, sticks on the wood or in the ground, and then, make your decision. But this is a question of how much you want to risk. So I would be waiting until we got to that level. If I miss it, it'll most probably go up and pull back one more time to get it. But these long bar candles, they scare me, and they should scare you because they mean quite a bit. And they're trying to tell you the same thing. What we're doing now, folks, if you're new to TFNN, is that we posted the gold chart going back to the low we made back at 1539 on April the 4th, and now we've gone up to we rallied about $50, and now we're coming down to the 61% retracement. So far, we were within $0.50 of the exact number, and so we'll wait and see if the thing comes in and hits the number lately, and we'll have to just wait and see if that is going to occur. We should take a look, because I know this is not the commodity show, but I wanted to do something else first, and that is to show you the divergence that we're having in the oh dear, my computer sticks. Boy, folks, all of my frustration in these markets comes from the fact that these markets or the computers. Nothing wrong with the markets. It's computers that give me the willies. I mean, they really they drive me crazy more than anybody else. Now, the Dow Jones Transportations, I'm posting it in over the last couple of weeks, and you'll see that we're making lower tops, even though we're having a big party for the Dow and the big party for the S&P. We're not having that same party in the Dow Jones Transportations. The utilities are still moving up, but they're right at a big three-drive pattern too. So it's going to be interesting here for the next spot. But someone asked me my game plan on the S&P is that when the Dow hits the 1528 level, I will look to go short the S&P. It should be at around the 1583 level, right where it is right now, and then we will risk 10 points on that trade or $500. That's all we will risk. We'd like to see that happen before noon, and if it happens right towards the late part of the day, we will wait one more one more day because we have trading overnight. Plus we can still do the thing. Now we've just hit the 1558 level in the gold. That is the 618, and I am not buying here. I'm waiting to see what is really happening. Someone just asked a question. By the way, almost no one knows this. Well, Tom does and Steve, but I'm doing a new book, and it's got some great statistics in it. It's on astrology. It's a book on financial astrology, and we're doing a lot of lunar cycles, and these are really incredible. But what we've done is we've been able to see astrologically why we have these things like buy in May and go away, and why we have the July rally, and why we have the bearishness in October. These are all related to the astrological signs that are there. It's just truly amazing, the statistics that are there. I mean, we know the statistics for why these things work, but now you're going to be able to take a look at it and see that it's all related to these signs that are in the universe. And so that's going to be quite interesting when we publish this. It'll be towards the end of the year, but that's it. We just hit the 618 exactly at 1558.5, and if you're really gutsy and you don't have to risk more than about $4 here, I don't think, and that's on a $155,000 contract. But with the wide-ranging bar, it is far better to wait a little bit. We got a call from our friend John in Philadelphia. John, are you there?
Hey, Larry, thanks for doing the show and taking the call, sir.
What can I do for you, my friend?
Larry, I wanted to bring up a question for you specifically about the S&P and Fib calculations.
Sure.
I posted some numbers just now in the den for your listeners who are in the den and listening to you. So I referenced back to the week of February 4th, and I recall vividly you sharing with us at the time a calculation done by your friend Ehrman, E-R-M-A-N, I believe.
Yeah, Bill Ehrman, huh?
In which he gave a calculation based upon the March 2009 S&P low at 667 with a target price of 1515. And the S&P, the day you brought that up, was exactly at that level. And it was based upon a Fib expansion calculation. Well, 1515 has been surpassed.
By quite a bit.
And I did the next Fib calculation, which gave me a number of 1745. So my question is this, and just your experience using Fib expansion calculations, is it highly likely or unlikely that the S&P, having surpassed one Fib calculation, 1515, moves on to the next, a.k.a. 1745?
John, the difference between 1583 and where we are now at the 1745 is beyond my consciousness.
Gotcha.
I'm like you, John. I pay my bills by buying and selling, and to me to try to make a 170-point prediction in the S&P, that's not in my, that's just not in my bailiwick, or it's not in my thought process. I'm more interested in what's going to happen in the next 36 hours, because that's where I can trade, and that's where I don't have to risk very much. That's what I'm. But you could certainly easily make 1745. Look, if the market did what it did in 1999 and 2000, that was 13 years ago, we might see a repeat of that. I don't know. Johnny, we got a break here. Will you stay with us?
Thank you, Larry.
Stay with us, please. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back. John, are you still with us?
Larry, I am still with you.
Okay, regarding Bill Ehrman, Bill is in his 80s. He lives in Nashville, and he's probably got the best program for numbers that I've ever seen. Some of his calls are, really phenomenal. They're all based on the things that you just posted into the den. But they're longer-term things. John, we've spoken hours on the phone before, but, the secret to trading is the amount of risk that you have to take. The predictions are, really good and stuff. Sometimes they work, sometimes they don't. But the real key to what you're doing is risk. And if you can handle the risk and able to take several losses in a row as opposed to staying in, a trade that just keeps beating you up, you're going to be far, far better off, because the first loss teaches you a good lesson. The second loss spanks you badly. You know that as well as I do, and that's the difference between a professional trader and a neophyte trader. Is the professional trader will take his loss quickly and move on, to the next thing. And I know you do the same thing as I do. So that prediction between 15-15 and 17 75, it certainly could happen. But, John, there's going to be a lot of trades between then and where we are now.
Oh, I can't agree with you more. And frankly, I asked the question not from the perspective of defining short-term trading parameters, but rather to ask the question of realm of possibility and figuring and thinking about targets for a strongly trending market. So that was the purpose.
That's true, and I believe and as a matter of fact, when you listen to Basil, I don't get to listen to Steve because he comes on too early, and I'm real busy in the morning. That's when most of my work is done. But when I listen to Basil, he keeps you soundly on the right side just by looking at that little chart that I posted from Livermore early in the thing. Is if you got higher bottoms like we've had in the S&P for the last week, you're in an uptrend. If you got lower tops like you've had in gold and some of these other things, you're in a downtrend. So if a person would just learn to do those simple little things, they'll be far better off than if they try to predict what's going to happen 3 months down the road, because nobody knows that.
Indeed. Larry, listen, thank you so much for your time in doing the show. Appreciate it all.
Thank you very much, John. Okay, I want to end the show here. We're going to be ending it pretty quickly, I guess, because we've only got a couple minutes left. Is that gold is trading right now at the 61% retracement off of our low. We've got about $1 or $2 below it, and I would suggest wait at least 15 minutes. And if you're above this 15.58 level, then that is a very low risk buying opportunity in gold. So you wouldn't have to risk any more than the low of the day. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.